Hello everyone and welcome back to a new video on the channel. Now in this video I am going to be explaining and showing you what the funds are, but in this video I am going to be explaining why I'm DCA'ing into these new ETFs, well ETPs, these new funds, exchange traded products on Trading 212, and why I think it could be beneficial for a portfolio. So let's get into it. First things first, let's do a little market check. So the S&P is down slightly today. Over the past week and month, it is up a very nice 24% in the past year. And single stocks, Palantir is also up around 40% this week, which is huge. So the market's doing okay. So let's see what funds these are and why I'm DCA'ing into them. Now, the reason I'm calling them new is because they are fairly new on Trading 212. They've been around since September last year, and they are IncomeShares ETPs. So I have two pies here with these IncomeShare ETPs. One of them is for their ETF backings. So they have one with the S&P 500 and the NASDAQ 100, and this is how they are performing down the last week. And that is because these things usually dip on ex-dividend dates. And I'll show you why in just a second. So I currently have 2.1k in these things, or 2.2k in these, which I know isn't a huge amount of money, but we are slowly DCAing in. So let's do another DCA right now. We're going to do £100 into this one, and then we're going to hit confirm, and then we're going to do £50 into this one here. Long term, I want to have around a 50%. I want to have the majority of the funds in here and then 50% in here. So 50% of what I put into here goes into here, essentially is how I want to have it long term. But for now, the distribution ratio is kind of off, but it's not off by a huge amount. So let's see what these ETPs are. So they are IncomeShare ETPs. Now, IncomeShares is a company that is sort of a branch of leverage shares. Now, leverage shares have been around for a long time, but these IncomeShares are essentially what they're doing is they have these as underlying assets, Tesla, Amazon, Google, Meta, etc., as underlying assets, and they are trading options on these. So they are trading options on Tesla, and they are currently distributing the income that they're making from these options trades. And the current distribution yield for Tesla is 85%. Now, I will say one thing to mention is that this distribution yield will change month on month, because at the end of every month, so as you can see on the declaration dates, at the end of every month, the distribution yield gets announced for that month. And then, of course, that will change this overall yield because it is an average of what they've paid out. So if we take a look at the distribution calendar, this is just for Tesla to start off with. You can see when they first launched, they started at 37 cents a share. Now that is currently at 55 cents a share. So if we take a look to see how things are doing on the other shares, and I'll show you what my current yield is in a second. We'll go over to a dashboard where I have everything calculated. But if we take a look at, let's say, the NASDAQ, for example, which is one of those ETFs that I have, one that I have in the ETF pool, the distribution has been announced for this month, 59 cents per share. And if we take a look at the distribution calendar, we can see here, this is how much they have paid out since they first started, which is nice to see an increase on the distribution yield this month versus December, which is great. And let's also take a look at the S&P. So the S&P, I believe, also went up to 60%. I think this was like 40% or something from last month. Yeah, last month was at 31 cents per share. This month it is being distributed at 44 cents a share, which is nice. So these things are extremely risky. You can see here that they have insane yields. These yields are not normal. They are extremely high. And again, the reason they're able to distribute such high yields, 90%, 60%, 93% yield, is because they're trading options on these underlying assets. So they are risky, and the reason they are risky is because options trading is risky, but we're essentially putting the money into this fund for them to do the options trading for us. So they are risky. And the other sort of risk aspect you have is that they're not sort of focusing on growth. They are purely focusing on income producing. So if you want growth in your portfolio, then these probably aren't for you. The price does swing, but it's mainly focused on income versus growth. They're not sort of prioritizing the growth of the stocks. If you want the growth, then I would probably go towards the actual underlying assets. So for this example, Coinbase directly, or the S&P 500 directly, because although they are sort of following the underlying assets slightly, they are more focused on the income side of it. So you're not going to get the same gain as if you were to just put money into, for example, Vanguard's S&P 500. But they are pretty risky because, of course, it is trading options on these stocks, and also they are pretty new and they don't offer growth. So if you want growth, I'm sort of building this as just an income side of the portfolio. And yeah, if we take a look to see it in the individual holdings, what I've got Coinbase, Nvidia, Tesla, Google, Amazon, Apple, Meta, Microsoft, and this golden yield that they also have. Most of them are down slightly. A couple of them are up a little bit, which is nice as well. On the ETF, so the Nasdaq and the S&P, they are down as well. But it's okay because we are going to make up for that in yield. So let me show you how much yield we are going to be getting on these. So this is how it is currently distributed. This is over on Snowball Analytics, and this is the portfolio. And we can see what we have invested here, and we can see the future payments. So at the moment, we are currently expecting around £105 per month, or a 64.18% dividend yield, which is massive. That is huge. That is absolutely insane. So we're expecting, and again, this is all based on current distributions. So it will change, obviously, month on month. But a 64% dividend yield is absolutely crazy. And that's why they're kind of risky, is because I want to see more data on them. But we're expecting around £104 a month. You can see how that's broken down. We've got £53.66 from QQQO. We've got £37.16p from SPYO. We've got £4.64 from Coin or Koi. We've got £4.26 from TSLD, which is Tesla. We've got £2 from NVDD, which is Nvidia. 99p from METI, which is Meta. Amazon or AMZD, 25p. MSFI, which is Microsoft, 20p. Google, 20p. GLDE, which I believe is the gold fund, is 8p. And then Apple is £1 there. So that is looking at around £104.44p in declared income, which is nice considering I've only put in 2k into these. £100 a month in passive income, that's pretty cool. So imagine if you scale this, imagine if I put 20 grand in there, then that's going to be a huge 1k per month, which is a pretty nice boost to the portfolio. Even if I put, let's see, I've got £15,470 in this Trading 212 portfolio. 13 grand of that is cash. Now, I know I did just put an additional couple £100 in, or whatever it was. Snowball is probably going to take a minute to actually sort of, because it's done through API, right? So it may take a minute for it to go ahead and notice that I did just make that new investment. So actually, if we go to analytics here, we go to general, maybe. No, let's go to portfolio transactions and have a look at that. So actually, I had to import the portfolio again. So I did just do that. And now it has updated my monthly dividends. So because those shares that I've bought are past the dividend date, it's not going to calculate that for this month, because, of course, this month's dividend has already been declared. I believe it was declared on I think the ex-dividend date was the 2nd of February or something, 3rd of Feb. So any of the shares purchased before the 3rd of Feb will get the payment on the 12th of Feb, but anything after the 3rd is going to be for next month. So it's obviously just taken the yield for each of them and kind of added those extra payments. So you can see now we've now got that 2.5k invested, 2.4k value, total profits down, but the passive income is up in terms of the actual number, and that will go to 129 next month, assuming nothing changes. So this is how the portfolio for these income shares is currently looking. Pretty big, £129. Now, if I did go ahead and invest this whole sort of 15k that I have in the portfolio, let's get rid of this. This is just the sort of this is just the history that I had to import over to Snowball. But if we take this sort of 13k or this 15,470, let's pull up our calculator here and do 15,470, and we times that by, what was it, 64%? Was it 63.77%? 63.77%. That would be 9k per year, which divide that by 12, around £800 a month, which again is a pretty nice boost to the portfolio. Now, I could use that to either reinvest back into these funds. I could use that to fund my S&P 500 on another platform that I have that on. So there's a bunch of things you could do with that. So one sort of strategy here could be to buy income, okay, which is going to be through these funds or through other funds, and then take that income and then, with that income, buy other shares. Like I could buy, 1.1 of VUAG with this £105, for example. So I could take buy this income. Essentially, I'm buying these funds for income, take the income, and then buy sort of growth shares with that. So because I'm only 23, so the benefit right now for me is for growth. I do want to have an income side to the portfolio, though. I don't know. I just find, I try and prioritize income when it comes to investments. I like to get to a high income number with those investments, but I think something like a dual strategy would be nice, where I'm taking the income and then purchasing for growth, for example. But yeah, I just wanted to show you what I'm doing with these income shares. Now you can see, if we go down, you can see how much cash they're holding in each of them. So they are growing. Their total fund has over 10 mil now. I think this is the most. I think this is 2 million here. 1, 2, 3, 4, 5, 6, 7. Yeah, 2 million in cash. So, which is pretty nice. So the S&P 500 ETP is up to 2 mil, which is like 20% of their overall income shares fund, which is quite cool. So it will be nice to see, obviously, as they keep growing, to see what the dividends will be. The fees are fairly high, a 4.45% management fee on the S&P 500 there. But of course, they got to make money. They've got a team of traders trading these options. So we'll see how it goes. But yeah, thank you for watching. Hope you enjoyed. Subscribe if you want to, and I'll see you in the next one. Peace.